Hello, welcome to Super Return Asia. I'm Sarah Clark and I'm joined by Josephine Price.
Hi.
Now, you're Anthem Asia's Managing Director. You've actively managed private equity funds across Asia for more than 2 decades. Your focus is on emerging markets and championing investment in the developing world. Why?
When I arrived in Asia in 1983, and Asia was still waking up, and Hong Kong at that point you couldn't get across the border to China. So I think I've been privileged at watching a huge economic and transformational change and as each economy's come through, whether it's been China, Vietnam, Indonesia, it's been an extraordinarily interesting journey watching that. And I felt that we've been able to see business lessons from abroad being applied to these markets, changes in consumer behavior. So when I look at markets like Myanmar coming up, it's an opportunity to have that journey again. So I do think Asia is now going back to the role it played of being a hugely important economic area, whereas previously, post-Second World War, it wasn't really as important. So it's been fascinating.
So Myanmar, you touched on Myanmar, it's one of your key markets. Was the decision to focus on Myanmar based on changing consumer behaviours, and how have you applied the private equity formula in this market?
Okay, so with consumer behaviour for a consumer market, we like domestic brands. We believe in championing domestic brands, and Asia is now renowned for having lots of domestic brands. Again, go back 25 years ago and you probably couldn't count them on one hand. You could count them on one hand and now you can't. So when you look at a domestic market, if it's got 50 million people, you've got a sizable enough market to have a really interesting domestic consumer story. So that's why we're looking at Myanmar. It's got enough people, it's got the demographic dividend, it's got a lot of people who are under 25. You've still got that feeling there, I know it's a bit weird, of tomorrow being a better day, people having that additional chat in their pocket to spend. In the US, it was the 50s, you know. I want that lifestyle, I want better education, I want better products. So you're starting to see that play out, albeit at a lower level. When we talk about the emerging middle class, we're not talking about rich people, we're talking about people who can now afford a home, have a car, send their children to school, and then what choices do they make for that? And for that to work, then you do need to put some equity investment into the market and work with the companies as they grow to meet that need.
Okay, and this is a big, broad question, but how is consumer behaviour changing, and does it depend on geography?
That consumers are different all over Asia. In Myanmar, they're very value conscious. They're very extraordinarily price sensitive. They'll be very conservative. Big families function as an economic unit. Most children will stay at home until they marry. So it's different to an environment where, you know, once you get your first paycheck, you go off and spend it. Your paycheck comes into the family pool. So economic decisions like, are we going to buy a fridge, are we going to do that, will be exercised by a family. You'll have a little bit of discretionary spending for t-shirts and stuff, but not quite the same sort of millennial spend that we might see in other economies. The family will sit down, and usually it'll be the mother who'll be saying, you know, we need to send someone off to college, this is how we're managing the family's budget. We're starting to see that change, and the huge leapfrog on the digital side has meant that in many ways it's a bit like bits of the 1950s combined with the most aggressive parts of the digital revolution in terms of social networking, information, digital. The use of digital phones has gone from, I think when I arrived, probably about 5-6 years ago, no one had phones. And now everyone's got 90% smartphone digital penetration. So can you imagine that? So the mother may be sitting there saying, should we do this? And then she's going to look at her phone for the answer. So it is in a very interesting juxtaposition of a sort of closed, emerging, but with the latest technology put on top.
And is there also increasingly a business case for investing in ethical companies or local sustainable operations in these markets?
I think globally the trend it used to be you gave money away and you did good stuff, or you made lots of money. And over the past 20 years, this continuum has reduced, so that sustainability and ESG is now not seen as a should have, it's a must have, because it's a way of measuring risk and measuring sustainability. So we've always believed in having this, and we think that increasingly people will have it. And for a market like Myanmar, which is emerging, that it's coming in at an early stage is good, because it means that the young companies that we're funding will have a very solid foundation in things like corporate governance, making sure that, you know, zero toleration for corruption and bribery as they grow, rather than that being fed on later. So I think that's going to make them attractive as businesses as they grow, and also better places to work. Let's not forget that, and treating their suppliers better. So it's a value chain which works. That's why we think it's a good idea.
Looking at the change in consumer behaviour, is the bigger change being driven by the younger investor?
I think it's a transition. So the people who may be investment officers will be in maybe in their 50s now. So they'll be part of the generation that maybe thought it was a good idea in their 20s and 30s. So that shift has been a slow shift from ESG and the principles of responsible investment and all that being a sort of nice thing to people who believed it, and now they're in positions of power and they're able to say, this is what we're doing. So I've seen it as a sort of slow shift. So when we talk about young investors, yeah, they were young then and now they're a bit older and they've got some authority, so they can start saying, this is what we should be doing. It's also, I think, people have seen the benefit of having something that's very consistent. Certainly social media has meant that you are unable to hide behind saying nice things but doing bad things. In the recent things in the UK, where I think was it Church of England was talking about zero-hour contracts, and then it found out that they were actually using zero. So you can't hide, and people have to be much more on message. So I think the difference is the transparency. Coca-Cola can't really talk about sugar when it has to be very careful about the message it delivers now, because social media is going to push it right back. And Myanmar social media is extremely aggressive, and if anyone's not doing anything that they don't like, the message goes straight out.
Yeah. Looking at the overall changing consumer behaviour in the investment market, has private equity and the investment community, have they taken note of these kind of the shift and the changes?
Yes, I think so. Not all of them, because I said if you're a big infrastructure fund, it's unlikely. But if you're playing in the consumer space, I think they are noting the changes. So if you look at something like Gojek in Indonesia, that's an example of a private equity working up, putting a lot of funding in, or grab, into a local solution. The local consumer in Jakarta, you've got to have a motorbike. It can do all these other things. So that's a very much local consumer-driven story. And then that's feeding into food delivery, that's feeding into delivery of other services. And so we've seen them now thinking it doesn't just have to be the way the US consumer market went. The Asian consumer is on a, whether it's crazy rich Asians, but not quite there, but on the lower level, it's how they want their own brands. So the biggest growth sector in the F&B will be in Asian brands. If I go in Myanmar, we have a number of Singaporean brands who are coming there, and they're doing just as well as KFC, if not better, because Asians tend to like Asian foods. And so that's looking at the Asian consumer and following that journey, I think the smarter funds are doing a good job of.
Josephine Price, thank you very much for joining us.
Thank you.
Thank you for joining us, and if you'd like to watch more conversations like this, please go to Twitter and look for #SRAsia. Bye for now.